If I tell you that many London families are in debt, that's not a news story, is it? Of course, you know that. Many London families are in debt. It may be that the vast proportion of London families are in debt. But if I tell you what the average debt is, so the average amount of money owed by a London family, and this is on top of the mortgage, this isn't including the mortgage, this is on top of the mortgage, what would you guess that debt to be? 5 grand? £10,000? 15? Shall I tell you? The average amount of money in which a London family is in debt, £40,000. £40,000. Not including the mortgage. London's household debts are treble the national average. And I'm joined on the line by Jonathan Davis, an economist and wealth manager at Jonathan Davis Wealth Management. Jonathan, good morning. Happy New Year to you.
And to you, Vanessa.
Not such a happy new year, though, for those families with £40,000 worth of debt in addition to their mortgages. Does this strike you as an outrageous amount, or are you not really surprised to hear it in London?
Unfortunately, nothing strikes me as outrageous about our financial system any longer. It is mildly surprising. I'd like to see the data that the surveyor was using. However, what we know is that London is a rainbow of economic situations, from the absolute richest in the world to the poorest in Europe. 10% of Londoners are unemployed. And of course, it's astonishingly expensive to live there.
I mean, some people will be thinking, how do you rack up debts of £40,000? Other people will be thinking, actually, that's less than I owe. And other people will be thinking, I owe something like that amount. How on earth am I ever going to keep my head above water and pay any of it off? I mean, what is the situation if you're trying to live and work in London and your debts have reached £40,000?
Well, I wonder if some of the debt includes student debt. So that, therefore, I think most people wouldn't be surprised by that level of debt. But then when we think that some 1 in 6 of us have gone self-employed, and self-employed earnings on average are really very small relative to those who are insecure for, shall we say, public sector jobs or multinational or, of course, banking jobs. If self-employed earnings are relatively low, and as it happens, they're not included in the national average earnings indices, which is a disgrace in itself. So if self-employed earnings are low and there's a sizable number of them, then of course the cost of living in London is going to tip you over the edge. And being self-employed, I'm focusing on those because there's more and more self-employed. Being self-employed, you're going to keep on going to try and make it work. And that means you're going to use the plastic, you're going to use overdraft and so on. And of course, you're going to use those big money lenders that charge 1,000% per annum. So, you know, I'm not... We do understand that there's a lot of debt around, but people absolutely have to take control, because although we haven't had a recession yet, when the next recession comes, I think that could be absolutely tragic for so many.
But I'm just trying to figure out how, you know, if you're on a relatively low income, even on the average income of around about 25 grand a year, or even on, you know, more money than that, how you manage to pay rent or a mortgage, feed your family, have shoes that don't have holes in them, pay for transport even if you don't run a car, and also attempt to pay off that staggering amount of debt. I mean, it's a terrifying prospect to be engulfed by debt that large, isn't it?
It is terrifying, and it's probably literally impossible to actually pay off the debt when the cost of living in London is so high. And as I say, and I've been writing about this publicly in the last 6 months ago, it seems likely to me that the UK had 3% growth in 2014. We had just over 2% growth in 2015. It's likely that 2016 will have sharply lower growth. Indeed, we might even be going into the first recession since 2008. And this is the thing, Vanessa. In the recession, the policymakers will not be able to slash interest rates, which is what they have done every single time the economy's gone backwards in the last 40 years. And I do not say this lightly. It seems to me that the next recession is actually going to be depressionary. Lots of people are going to lose their jobs, lose their homes, go bankrupt. It's not going to be like 2008, where they slashed interest rates from 5% to 0.5%, bailed everyone out. They won't be able to do that this time. People have to take control, and if that means getting out of London, then so be it. Because if they want to remain owning a home and they've got this vast debt as well as a mortgage, well, as I say, such sharply slowing economic growth, they are at severe risk.
Thank you very much indeed, Jonathan Davis there.